What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we see a slight bounce across the board as we are still holding up above some critical support levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, thanks again for helping me reach 2,000 likes on last night's video. If you want me to keep rolling on with the hot stock segment, please remember to smash that like button and help me reach 2,000 likes on this episode as well. Alright, so in SPY we were up 0.32% today, and we did bounce off of this level right around 412, and it did look like our falling knife was starting to lose energy with yesterday's candle, and we did see very low volume selling. So there is no surprise to start seeing buyers stepping in at this level. Now remember, buyers do not need high volume. We simply do not need high volume selling to start going higher from here. So if we don't see any more sellers stepping in at this level, I do expect to see SPY retesting resistance above at 416. And above 416, we will be getting a lot more risk on. Above 416, we can start running to close the gap at 421 and even retest the previous highs at 430. But while we are below 416, you still need to be cautious of more potential downside. For example, if price action gets up to 416 and we see a sharp rejection from that level, you are going to be looking for a test of support below at 408 and the average drawdown level right around 406. Now keep in mind, the average drawdown is from all of the previous bear markets, so that is going to be a very strong level of support, and there are more than likely going to be a lot of long-term investors trying to accumulate around these zones. Now remember, long-term investors and traders are completely different, and as traders you need to manage your risk each and every day. Long-term investors are buying for years on end and they have the advantage of time on their side. But as a trader, you do not have the advantage of time, and you need to be managing your risk very tightly. So stay risk off while we're below 416, and you can trade off of this support zone right around 411 to 412. But if we lose that support, you're instantly looking for the next leg lower at 408 and then 406. As long as we stay above 406, I still think this is going to be a higher low before the next higher high, because we do have a bull market structure of higher lows and higher highs, and we do have the bull trend. On the Nasdaq 100 triple Qs, we were up 0.29%, and the triple Qs are still holding this support zone right around 314. And again, we are not seeing any high volume selling. So as long as we're seeing buyers at this support zone between about 312 and 314, there is still a real possibility we get a bounce all the way back up to close the gap at 322. Above 322, we'll be getting a lot more risk on, and then we could start running back up to 334. And more than likely, if we get all the way up to 334, we are going to break out and get to about 339 or possibly even into the low 340s. So as long as support on the triple Qs is holding up at 312 and 314, you can buy the dip at this level and set your risk there, but do keep in mind we are not getting more risk on until we get all the way back above 322, or at least wait until we can break back above 317. So we're waiting for the break above some upside resistance to get more risk on, unless you're accumulating at these support levels for the long term, which means you're an investor and don't mind holding for long periods of time. If we break support at 312, look for the next support leg lower at 307.5. In the Dow Jones, we were up 0.23%, and we see the Dow Jones holding that support at the gap close right around 329, and that is going to be a support level as long as we continue to see buyers at that level. If we lose support at 329, there's going to be very strong support at 324, so you will be looking for the next leg lower if we break down below support. You're getting more risk on above 333, and then we're likely going to fill the gap at 336, and above 336 we could start running back up to retest the previous highs, which are just below 342. And above 342, look for that next leg higher to close the gap at 347. Remember, all of the indices are still in a bull market structure of higher highs and higher lows, so the next higher high to take us to 347 is a very real possibility. It's just a question of whether or not the higher low is going to be 329 or 324. On the Russell 2000 IWM ETF, we were up 0.76%, and the Russell 2000 by far looked the strongest today, getting a very strong bounce off of this support right around 191, and just below we have support right around 190. So as long as IWM is holding above 190, you can stay bullish. But if we break support at 190, you're looking for a retracement all the way back down to 184.5. Upside price targets will be the gap fill at 194, resistance at 196, and the previous high at 201. On the ARKK ETF, we're up 2.61% as we are starting to see a bounce off this support at 43, and I still think it's very possible that we come up here to close the gap just below 47. But there could be the possibility that that is a lower high before the next lower low, which could take the ARK ETF all the way down to 40. So be cautious below 47 because this is still a bear market while ARKK is below 47. And do remember, in a bear market, you're looking for lower highs and lower lows. So on a breakdown below 43, look for the next support at 40. On the VIX, we were down 5.27% as we see the VIX getting crushed down from that resistance at 24, and we still have the gap to fill just below right around 21. So the VIX crushing from 24 all the way down to 21 is going to be more in line with a bull trend. So keep that in mind. If the VIX continues to crush lower, you are looking to be more bullish. And if the VIX spikes above 24, you are looking to be more risk off. On Bitcoin, we're currently up 0.9%. Bitcoin is trying to break out above this resistance at 21,600. And if we successfully break resistance, the next test of resistance will be the 20 simple moving average at 23,000. The strong resistance is all the way up here just below 25,000. And we will have the bull breakout if we can see Bitcoin breaking out above 25,000. And I do think crypto winter is very close to being over. So if you are bullish on Bitcoin in the long term, you can start accumulating at these levels. Just keep in mind, as a long-term Bitcoin investor, you should be expecting to hold for at least 2 years from today's date. Continuing with our big tech hot stock names, we have Amazon going up 0.13% today, and you need to be cautious on Amazon because we did close below our support trend line. So it's instantly going to be more risk off while we're below 136 because we could be coming down to lower prices and you need to manage your risk accordingly. While we're below 136, we could be coming down to support, which is right around 128, 125, and 123, which will fully close the gap to the downside. If we can break back over 136, you can get more risk on with upside resistance at 138 and 144, but be cautious while we are below this support trend line. On Microsoft stock, we were down 0.24% as Microsoft is coming back down to this support zone right around 275. And if we break 275, we have one more line of defense for the bulls right around 272. If we lose all of that support and come all the way back down to 267, that will be extremely bearish. So for that reason, you're getting a lot more risk off below 275. If we bounce off 275, you're getting a lot more bullish for the retest of resistance at 283, the gap fill at 286, and resistance at 290. On Nvidia stock, we were up 0.24% today, and Nvidia does have earnings after the bell today, so it's a coin flip of where it's going from here. But a bearish breakdown will be the breakdown below 170. Below 170, we're likely coming back down to 165, 161, or closing the gap at 158. But as long as we're above 170, we could go higher to fill the gap at 178 and test resistance right around 180. Above 180, we'll be looking a lot more bullish, but while we're below 180, you need to be a lot more risk off unless you are setting your risk down here at 170. On Tesla stock, we were up 0.22% today, and Tesla did get another daily close above the 20 simple moving average, but did find resistance intraday, and we did see a lot of sellers at that resistance. While we are above the 20 simple moving average, you can set your risk at 890 with the next upside price target at 928. And on a breakout above 928, it should be a very quick trip to the next price target at 970. To the downside, you need to manage your risk around 890, the previous low at 870, and this very strong support level at 850. And below 850, this will look like a double top, which means we could be coming all the way back down to 775. So you're getting a lot more risk off if Tesla loses support at 850. On Apple stock, we were up 0.18%, and Apple is hanging in there just above this gap close and continues to close above the 20 simple moving average. So as long as it's above 166, you can stay on the bull. If we break below 166, get more risk off for the downside price targets at 163 and 157. But while we're above 166, we could be trending back up to 170 or closing the gap right around 171. And if we go through that gap, look for the next strong resistance right around 174. On the financials, we were up 0.53%, failing to close back over the 20 simple moving average, but we did close the gap to the downside, so it could be possible that we're going to start trending back higher to close the gap to the upside. The industrial sector was up 0.33% and continues to close above the 20 simple moving average. And keep in mind, it has a gap to the downside and the upside, so use that risk level right there at the 20 simple moving average. The healthcare sector was up 0.12% today, starting to sell off ever since it lost support, and it could be trying to make an inverse head and shoulders and starting to build out the right shoulder. So use this very strong support level to set your risk down here at 126, and you're getting a lot more bullish above 134. The energy sector was up 1.23% today, clearing a very strong resistance level and very likely coming up here to about $84 next. So as long as the energy sector is trading above 79, you can stay on the bull, but do keep in mind there is a gap to fill to the downside just below $80. So jumping back over to the S&P 500, you need to be a lot more cautious while SPY is below 416, but we are definitely seeing signs of seller exhaustion and buyers stepping in at support, but it's all on very low volume as the market is waiting to see which direction it wants to move next. So just stay risk off while we're below 416, and you can get a lot more aggressive and risk on if we break above that level. Also remember, on the Stocks Channel Discord, you get full access to all of my intraday updates and analysis, and I do bring new trade ideas to you weekly. So if you're interested in trading with the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're interested in learning more about Bank or want to subscribe, just click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.